What's going on, guys? What's going on? Let's give it a minute or two. Got about 30, 40 people logging in here. About first 30 seconds. What's going on? What's going on? Happy Saturday. Happy Sunday. Oh, I guess Saturday, some folks. Sunday, most. We'll get ready on this session. I'm really excited for this one. Just planned for about a couple hours, so I'm looking forward to this one, guys. What's up, Robbie Marks, Nessa, OMS? Eric, how are you? TBD, how you doing? Just got a little music going. Keep the blood flowing. Looking forward to a fun session, guys. Give everyone another 30 seconds here, a minute or two to log in. What's going on? What's going on? Should be a super fun session, so we'll have a good one. It'll be a good one. Technical deep dive. This will be a fun one. Definitely bring your questions. As I said, I always make a joke, pen and paper. It's going to be a fun one. Have some questions ready for the end of the session. But interesting times, interesting markets we've had. So it's been fun, but want to prepare obviously for this week coming up. Last week was pretty nutty in terms of volatility, and I think we're going to see some similar volatility coming up. And volatility could equal big percentage gains or big losses, or a lot of money opportunities. So I want to make sure that we're best prepared. I'm best prepared. Following the volatility up, following the volatility down. It's been pretty crazy out there. So before we get started, we got about 75 people joining. I usually like to start when I see 100 users in here. So just give about another 30 seconds, guys, and we'll do a quick intro and then just talk about some topics I want to cover today. What's going on? Marco, George, Goal, Travis, Sporky, Squid, Michael, thanks for joining, guys. Frank, Digital, thanks, guys. Justin, what's up, my man? Thanks for joining, as always. What's going on? So, yeah. Okay, 85 viewers now. We're popping here. We'll give about to 100 here, another 30 seconds, and we'll get going, guys. Appreciate it. I hope folks brought some questions as well. Obviously, there's a lot of panic and uncertainty going on in the markets, and we'll talk through some of that. And I want to talk through some technicals where I think you might see some buyers step in, you might see some sellers step in, et cetera, et cetera. So, talk through some of this downtrend that we've seen. 20% plus off the QQQ on the year, 13% plus off on the SPY, and Dow's starting to get hammered too. So, walk through some of that stuff. I'm going to bring you guys back two decades. Some people may have been alive, some may haven't. Maybe even bring it back 3 decades. So I'm going to bring back some charting because in charting world, trading world, investing world, things tend to repeat themselves. And so what we can do, all we have is to base it off of past trends. So that's what we're going to take a look at today. But first off, thanks everyone for joining on the Sunday night. I'll try and breeze through this session pretty quickly, but I want to be informative as well. I spent the last 2 hours sort of studying some chart breakdowns. But I will say a lot of this was predicted for me. If you come back to my YouTube on January 28th, 1/28, 2022, about 4 or 5 months ago, I predicted the exact move that's occurring right now on the SPY. You can look at it. I said we're going to get a sort of a minor crash, and we're going to get dip buyers. We're going to come back, maybe retest that 440, 450-ish, and then we're going to get rejected and maybe slam down. It's exactly what has happened if you look at the daily chart so far. We're calling it directly to the T right now. I didn't know it would, plan out that way. It was just my prediction of how it would, just with the interest rates alone. That was before all Russia and Ukraine uncertainty, so we have that as well affecting the markets. So there's a lot of headwinds right now on the sort of on a scaring panic, bear side mentality. So, I think the sentiment on Friday, I think I heard on television, was the worst since sort of that 1970s, 2008 sort of panic, and we're seeing that on the sell side. So, if you see that, there's potentially opportunities for long, but there's also opportunities intraday to be able to fight on the way down. So those QQ puts went probably 1,000 to 2,000% on Friday afternoon. You had Amazon, I think, ran for like 1,800% on puts. I mean, obscene amount of percentage points to the downside. We've seen, we've seen the Netflix side of things, like a $400 billion company now under $100 billion market cap, shedding $300 billion market cap in 6 to 8 months. I mean, obscene moves, like obscene moves. And these are like once every couple decade type of moves. And there's some traders, there's some funds, there's some people taking serious advantage of that. We've been there taking advantage of some of this volatility, but as I always say, volatility equals opportunity, because when there's volatility in the markets, when everyone's buying, right, the AMC, GME stuff that went really crazy fast, tons of opportunity to make money the upside, right? Now there's tons of opportunity to make money on the downside. So I'm going to talk through that. Anyway, back in. Welcome everybody. I'm Spud from Spud Zone. I've turned about 15,000 and over 2 million in the past probably 16 to 18 months. Started multiple account sort of challenges. You can follow me on StockTwits. I have about 24,000 followers there. You can follow me on Webull, and the most followed trader globally there with about 53,000 users. You can follow me on that channel as well. I just started a Twitter account. Probably don't want to be too active. I think there's a lot more noise on sort of that channel. I like to keep it where a lot of the stock information, a lot of the sort of the signaling, a lot of the trading sort of mentality. I want to keep that sort of top of mind when I trade. So I'm going to probably stay on those two for now. And I did open a Twitter, started an Instagram as well, so you guys could follow me on that. But really, I am not a financial advisor. I trade what I'm trading. I trade my own money, my own retail money. So I'm trading, hoping to make consistent profits, consistent gains, consistent, year over year. So that's my end goal. I have weekly goals, monthly goals, yearly goals. You can follow me as well in the Spud Zone Discord. We have an awesome options team. We have myself in there as well. That is Spud Zone. That's a premium Discord. You can check us out in the link. Our tech team will probably put it in the YouTube description now or in the comments section. So you can always join us on Discord, and I'm basically just alerting what I'm seeing real time in the markets, whether it's inflow, outflow, what I'm trading in real time. So as you guys may have known, small caps were pretty hot the last couple of years, but in the last probably 18 months, it's been very slow in small caps. I've primarily just completely switched to selling, buying and selling large caps as well as options. So, I'm following where the liquidity is, guys. So if there's big percentage movers, big percentage gains on the downside, upside, on the options, on large caps, med caps right now, that's where I want to be. That's where the money is. So, if small caps get hot again, I'd love to trade them. They were great trades in 2020. But we haven't seen that market come back. It's a very risk-off market. People are looking for more sort of secured investment or sort of more diversified approach. So we're seeing that. Going to talk through some charting here. We're going to look into today's session, covering 3 topics, guys. First session is the SPY, the QQQ, and then I'm going to cover Tesla and AMD. I know a lot of folks love Tesla. I'm going to talk through that technical charting. And then as well as AMD, I thought it'd be nice to cover AMD this week, given they have earnings after hours on Tuesday. As I mentioned, guys, Friday was a total flush washout. I call it the liquidity Friday washout. You're having uncertainty all week. Everyone's on edge. And this just Friday candle on the daily here, we just saw it just collapse. I mean, look at this red candle here. It's bigger than anything back until early March in 2022, where we saw a candle similar sizing. We just saw it just totally flush out. It was just, okay, I'm done with this market. I'm done with this week. And it was just hundreds of billions of dollars just came out of the market on Friday. Total outflows. So, with that kind of outflow, I gotta predict it's not the bottom. And I'm going to talk through the technicals on the SPY on where I think could be great opportunities to potentially go long. Okay, so we saw a big SPY, all-time highs in the market, hit about 478 here earlier in 2022, about the first couple days of the new quarter in Q1 of 2022, right? So we saw that move up in here. Great. It was a bullish time. Rates were still coming to increase. Then we started to see the rates. Okay, we're going to be raising faster. Inflation's still pretty high. Keep in mind, this is now before the Russia-Ukraine. Inflation's still pretty high. Everyone's like, but it's going to be transitory, right? The inflation's going to be transitory. Everything's going to be fine. We're going to get price action back. We'll be able to control oil and wheat and commodities. And, that wasn't the case. Everyone was optimistic, so they all bought the dip. Everyone sort of bought the dip in here, okay? Then we get a total washout flush in February, March time, right? And here's the daily chart. So keep in mind, I'm going to zoom in here. We got a double bottom here in March. Great from a trading aspect, short-term trading mindset. And we just get a totally overextended bounce. Even above the 455, which I was pretty shocked. This actually hit 460. And then we sort of get that double, triple top rejection back down. Here we are again, probably about 1, 2, 3, 4, probably about a 6, 7, 8% lower from where we were up there. And now we're in a very key spot on the SPY. I want you guys to take a look at the weekly chart on the SPY. Keep in mind, this big panic selling back down here was March 2020, so about a little over 2 years ago, okay? So let's look at the SPY weekly chart. We basically just see all we are is in a downtrend here. Not even a green candle to find a little bit of a bottom. Now, I like to look at weekly, monthly charts when I'm looking at the indexes because it gives you a sense of where we may bottom out or where there may be some buy zone sort of supply, or sort of demand, excuse me. And what I mean by that is, where is a big pension fund going to step in with billions of dollars? Where is a big index fund who just trades the SPY and QQ going to step in with, $10-15 billion? Where are these funds want to enter, right? They have all the quants. They got all the econ. They got all the PE multiples. They got everything at their disposal. But where are they going to enter and where are they going to exit? It's hard to know that, right? It's hard to predict the market. It's very competitive. So we as traders need to predict where a move is going to occur off a potential chart. As I like to say, history likes to repeat himself. So if there's a lot of areas of buy zone, that's where we may want to see a potential short-term sort of relief rally or bounce, right? So we have the SPY. As we saw, guys, the SPY broke actually all the supports on Friday. The major support was about 415 to 418 zones, and we just flushed through it Friday, which we saw I call it the liquidity washout, the toilet bowl flush. And that's what happens when you could get on a Friday afternoon where it's just, okay, things aren't going well, bam, sell button, sell, sell, sell. You've probably seen that funny meme with Kramer, sell, 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 buy, buy, buy. That's what I was thinking Friday. It was just, everyone was hitting the sell, sell, sell at the same time, and this thing just absolutely ripped down. SPY lost almost 4%. QQQ lost almost 5% in one session, guys. It's astronomical. I can't even say it's astronomical how crazy in terms of value came out of the market on Friday. Just one trading session alone was just insane amount of fearfulness. So. So we came down here. The SPY broke that 415, 418, right? So we break this area. This is that sort of last candle wick. Actually, Harmony Trades, our option guru, sort of in the Spud Zone Discord, alerted sort of if it breaks under this 408 plane this week, you're probably going to want to retest. You probably want to try 400 puts because just algos alone, we might be just bringing it down to 400. I think market makers look like they want under 400, guys. So we saw the drop, we saw the recovery, and then we saw the pop back down. I think we're going to see new lows. So here are your areas or sort of your supports. Get a pen and paper, or if you're on a laptop or sort of a mobile device, here are your supports. Your supports, you have around decent support around 400, these bottom wicks here. Keep in mind this is the weekly chart. Your next level of support on the S&P, this is the SPY, not the QQQ. This is the SPY. We have strong support in sort of that 375, 385 range. As I've said to people, when 2022 started and the SPY was at 478, I said, and people were laughing at me. They were laughing. They were making jokes. They were calling me I'm an idiot all over social media. I said, I want to be buying the S&P 500 and, tickers that have really sold off at the 385 level. Well, we're getting very close to that 385 level. Now, why did I say that? Because this is sort of that consolidation period back in 2021. Keep in mind, we're not even at 2021 lows yet, guys. We're not even at a yearly low yet. I mean, we're at 2022 lows, great, but you have to think about it, right? There's been investors that have been investing the last 10, 15, 20 years that are up 2, 3, 4, 5x. We're not even at 2021 lows. So when you see people saying, when is the bleeding going to stop? Technically, on a chart, I mean, we're still really high, right? We're still up there. So the 385 spot right in here for me is sort of where the big sort of bullish trend started. And that was back in 2021 on the indexes. So for me, I call that sort of that first level support right in here, about 385 on the SPY, okay? Now, that would be my first sort of buy area where you may want to start to scale in for some long-term opportunities. Whether that's a beat up tech stock down 80%, that you like the company model. Whether that's a industrial company or an oil and gas company trading 20x or maybe a 4x premium, a multiple, right? Whatever it may be, this could be 385, could be a nice area to potentially scale in. I might start to trade and take some maybe longer term options in here. The second level of support I'd really like to see, well, not like to see because it would be pretty scary to get down there, is the 360, which would be about another 8 to 10% correction on the SPY today. We're down about 13, 14%. Another 8 to 10% would put us at about 20 to 24% drawdown. That anything above 20% on Wall Street is considered a recession. Sort of a recession level. We're already in a recession level on the QQQ. And I'm going to talk through the chart of the QQQ soon. 2000.com bubble in 2022. I'm going to talk through that technicality. So that's the SPY. That's 365-ish would be sort of my next support, 365, 370. And then really the third sort of big support, I think, would be around the 350 levels, guys. And that would be about another 10% down from here. I don't know if we get there. If things get really bad, as I mentioned, guys, we have the Fed. We probably have a 50 bip hike this week. I would imagine everyone in the market priced in 50 bips. I believe 50 bips are coming on the rates this week. And they're going to start unwinding the balance sheet. Keep in mind, the Fed's been buying, different assets, guys, for the last 2 decades. So they got, I think, $7 or $8 trillion on the balance sheet from the last couple of decades. They start running some of that off, guys. We're going to see a correction in the market just off the runoff of the balance sheet, potentially. So, if they start, we don't know how fast these, they're going to run off on the balance sheet. They don't want to obviously put us right in a session, but they have to slow down the economy because of inflation. And then we have the meeting on Thursday, the FOMC meeting on Thursday with the Fed. And then, guys, keep in mind, it's not just, we're fighting the Fed and the market and the economy here, the global world economy. We're also getting uncertainty out of Russia and Ukraine, right? So, we have Putin over there. We have some crazy stuff going on in the world, guys. So there's a lot going on. And if you're a money manager with hundreds of billions of dollars or, hundreds of millions of dollars of clients' portfolios money, and it's not a safe, time to invest in. There's a lot of what we call uncertainty. And you've always probably seen the slogan, Wall Street hates uncertainty. When there's uncertainty, people feel uncomfortable, okay? And that's when you see these big drawdowns, which we're starting to see now, slowly start to trickle in. So if the selling, did the selling just stop? I don't know. We're going to see. I'm going to compare the charts. There's 3 different charts I'm going to compare today, and that's from the last 2 or 3 decades. And you guys are going to say, wow, some of these charts look really similar. Whoa, how does that look similar? So here's the SPY. Your levels are 385, your levels are 365, and then 350 would be sort of if we break below that, I don't know where the heck we can go. I'd call that fully no man's land, but those would be sort of the support levels for potential long ideas, okay? Now I want to go to the QQQ. I'm going to talk through this chart as well. So we're already in a bigger drawdown actually than the SPY. Another 7-8% bips on that from the terms of the drawdown. Going to walk through the weekly chart. I want to bring it back all the way to 2018. So let's look at this chart here from 2022. We see this sort of chart breakdown, right? We see the drop, we see the rip, and then the drop. Now, in 2018, we had some Fed sort of, some Fed tension, okay? And here's what happened in 2018. We saw a little drop. We saw the spike back up. Then we see the new drop sort of consolidates. And then we see, bam, the flush to new lows. We're kind of in the middle. Are we here? Is this the Friday candle? And then, bam, we just get another 8% drawdown over the next 8 days? I don't know. And then we see the recovery all the way back up over the next year or two to all-time highs? I don't know. That's a possibility. Right? That's a possibility. Do we get that final flush out and everyone's buying, and everyone's buying over the next 12 months and then we see the new highs? I don't know. Now that's one potential, right? That's one potential similarity in chart. This would be sort of where we are today, and then we get that flush and we buy back out. Keep in mind, this is a weekly chart, not a daily chart, guys. So this is about 7 days in between each candle, okay? That's 2018, okay? That's when the Fed sort of had to get involved, okay? Now, I want to show you guys what the QQQ looks like in 2008. And this is where I get a little more scared, guys. Because 2008, keep in mind, that was the housing and sort of the mortgage rate. That was everything. That was a big sort of financial crash, as many probably have read about, seen movies on. I don't know if we're in a financial crash, per se. There's a lot of craziness going on, but I think a lot of folks have made a ton of money. I think wages are good, unemployment's low. I don't know. I don't know if we're going to see that type of really blowout washout. But look what happened in 2008, right? We sort of started selling off from all-time highs in here, right? We see the recovery, which we just saw. Then we see the flush retest the new lows. Now, think of Friday's action, right? What happened Friday? We saw the breakdown of the double bottom, right? And we went below it Friday. Now, here we are waking up Monday morning. Are we now going to see like the ultimate 25% drawdown on the QQQ, another 25% drawdown when it broke the double bottom? I mean, that could be another 25% on the QQQ right now. That would be pretty impressive. I mean, that would be a big move down. I don't know if that can happen. I don't know if that will happen. I'm just saying from a chart, guys, this is like the total breakdown. 2008 just totally crashed, then consolidated for about 6 months in here, and then slowly recovered over the next 2 to 3 years. You know, people are anticipating, I don't know. People are anticipating a slower recovery to all-time highs, like years, not weeks, not months. So no one really knows what's going to happen, but that's the real blowout washout that I'm sort of referring to. That would be like the overextended downside washout. And then 2018, if you guys remember the chart I just showed you, was sort of stopped here in this bottom candle and then recovered, right, slowly back in here, right? Are we going to get that extra other candle? But no one knows. Are we going to get a double multi-candle down? Are we going to get one candle down? This week and next week are really going to be strong telling signs of, did we bottom, did we consolidate, or are we just massively still selling off? And that's what I'm going to be looking for this week, team. Like, if the selling action, if the price action's like big selling again, like, I'm going to be a little bit more patient before I start jumping into longs. If we sort of start to consolidate, right? Picture like a small cap stock. If it's consolidating all day, like, and then we just rip, that's how you could think about potentially the indexes as well from a longer term time period, right? From an investment standpoint, right? As well as like a trading standpoint if you're trying to overnight calls. But then I want to show you one more time in the QQQ, the dot-com bubble back in 2000, March 2000, okay? We dropped 47% in 1 week on the QQQ and the dot-com bubble, okay? Then we sort of consolidate, right? Consolidate. It's like, oh, is the selling finally done? Let's buy and go back higher. You know, everyone who's sort of buying in this consolidate. No, it actually just decides over the next 6 to 8 months to just dump another 30%. 30%. And I see a lot of media coverage. I'm seeing a lot of folks, a lot of traders, a lot of folks, research, some people saying we're in the dot-com bubble right now. Are we? I don't know. There are tech names down 70% from all-time highs. So from a technical analysis standpoint, we could be similar to the dot-com bubble. And the reality is when the first crash started in 2000, we never really recovered from the dot-com bubble until about, why did my chart just jump there? Where we go? Here we go. Sorry about that. Until about 2000 and we bottomed in 2001, about 10 months later. And 2002 we bottomed and then we slowly came back up. So I don't know if you guys heard Kathy Woods on Friday. They had a nice interview on CNBC and she was basically comparing this to the dot-com bubble and her research, and she's still extremely confident on her research and thesis to tech companies. She compared when she bought Bitcoin in 2015 when it bottomed. She compared, for $250 a Bitcoin. Now it's at, it hit 60,000. And she compared Tesla when they bought that at like 200 pre-split or something like that. So, she was comparing these names to the dot-com bubble. She's saying, yes, they can go much lower, but she still thinks there's tons of upside in the long term. And it's very funny to hear her think about, hey, in the dot-com bubble, all this happened and names just kept getting slaughtered and slaughtered and slaughtered. And they just saw new lows and new lows and new lows. But 10, 15, 20 years later, they were 1,000, 15, 100% winners is what she was basically talking about on Friday. And I thought that was very interesting because I never really thought about the dot-com bubble with what's going on in the QQ right now with how tech names are just losing 3 to 4 or 5% a day. I mean, it's getting pretty obscene and people are trying to chase bottoms. I call it the ambulance chasers. These people are trying to chase the bottom of the market and there really is no telling sign of the bottom of the market. A lot of folks you always hear is when there's the capitulation day, okay? What does that mean? When is the day where there's 90% plus selling in a market day? We haven't had that yet this year. When you see 90% sentiment and selling, that's kind of when it's like, okay, we might be at bottom. Maybe we should try some long. And, we saw that with 2020 COVID, and then we saw just a monster move off those lows. So there's potential, guys, for a potential bounce. But, I think we still need to find those bottoms. And we saw Friday, the selling just did not stop. So I'm very intrigued to see where we open and how we trade this week. If it's sideways or buyers start to step in, or sellers just keep hitting the sell button. So that's that's QQQ and SPY. Is that helpful? You guys have any questions? Like, is this help? Are these charts and this exercise sort of helpful when I brought it back a couple decades and every 8 to 10 years there? From the 2018 chart where we double tested the bottom and then we ripped back up, to the 2008 chart where we double tested, broke through the bottom, and then absolutely fell off a cliff, and then dot-com bubble where we just trickled off a cliff for the next sort of 2.5, 3 years. So there's three ways this can potentially go, right? We go down for another couple of years and without many bounces, or we sort of bounce back up, from this double bottom where we are now, or we sort of trickle even lower before a bigger bounce. So are these chart exercise helpful? We got about 120 viewers here, and I appreciate all of you joining. I hope this stuff's helpful. I'm going to jump into Tesla and AMD next, but I just want to give you guys a sense of where things are, right? As well as a lot of these mega tech companies are holding up the indexes. Apple's like 6-7% of the S&P. You have Amazon's, trillions of dollars company. 15% came out of Amazon yesterday. They're what, $2 trillion company. I mean, just think through that, guy. That's 300 billion plus in market cap in one day. I mean, some of that's pretty drastic moves, guys. Drastic moves. So I'm hoping folks are starting to see some of these charts and it's helpful. I'm happy in the comment section at seeing that these are helpful. So definitely write those down. Those I post those on my monitors because if I see SPY at 385, I gotta just take some on a buy. If I see some SPY at 365, like I'm gonna double my buy. I want to be scaling in, right? I want to be maximizing my portfolio because over the last 80 to 100 years, guys, the markets have only gone up. It's just about, when's a good potential opportunity to get in. And I'm thinking multi-year. I'm still 90% cash in all my portfolios. I'm just day trading this madness right now. Obviously I'm a trader, so I have that trader mindset. Okay, so those are the first two charts. I want to talk through Tesla and AMD, and these are going to be trading mindsets. So like what can potentially happen in the next couple of weeks to the bull side? What could potentially happen in the next couple of weeks to month on the downside? Okay, so we're going to talk through, let's go to AMD first, and then I'll save the best for last because everyone's here probably like, talk through Tesla. What's going on with Tesla? AMD, we have earnings on Tuesday. This is a very, very, very key spot on this name. And keep in mind, AMD and NVIDIA sort of set the chip outlook, sort of set the chip charting. They're one of the largest chip users. They're one of the largest chip manufacturers. So like a lot of these companies, right? You have AMD, you have NVIDIA, you have Taiwan Semi, you have billions and billions of market cap. Let's see what the guidance looks like. Let's see how the supply chain's doing. I want to hear all that on the call, but I want to see numbers as well. And where we are in the AMD weekly chart, we are right here in July 2021 supports at $85 a share. This is where it sort of tested on Friday. You see, this is a weekly chart, guys. Keep in mind, weekly chart. So, if earnings comes in bad, team, we can really see some major downside on earnings because as a technical standpoint, we're breaking down in here. So anyone who bought before July or after July 2021 is now underwater. I call that the pain. So, we could see some selling pain all the way down to $75 a share. Probably about an 8 to 12% move on the downside. Now, if we break 72, which is actually a triple bottom on the weekly, it could get really ugly for AMD, and we could actually fill the 54 gap fill. I don't necessarily see that. I think a good spot for this name could be around $74-$75. I could see traders stepping in here. Might see some funds stepping in here. It is a great company, but obviously it's been selling off with chip names. We have earnings Tuesday after hours, so keep an eye on this. Now, for the upside opportunity, we have potential upside all the way up to about $100 a share below these two bottom wicks here. You got a bottom wick here on the 128 in January. You got a bottom wick here on March 11th. So you have a double bottom wick here, and then this is a double triple bottom in here. So the upside wick would be that old support, which is here at around $100 a share, is now new resistance, okay? So the upside would be buying maybe $100 calls if earnings goes well. Maybe you get a 5-8% move to the upside. We did see Facebook in a similar pattern to this, was just absolutely selling off, came in good, and it roared over, It roared over 200. sort of that same mindset here, dropped all the way to the 80s, roared over to 180s, roared over 200, right? So we could see the upside move to $100 a share. The downside for me would be buying $75 puts, expiration Friday. And we'll see if that strike gets hit next week or tomorrow morning at the open. So the downside would be 75 for me for the next week or two. The upside for me would be $100 calls for the upside. Okay, so that's AMD. Is this helpful? Hopefully that's helpful. If you have a question, get ready for the Q&A. We're gonna do Q&A for about 5 minutes. That's AMD for you, and this is a short-term trader's mindset. This is if you're buying calls maybe 2-3 weeks out at the 100 strike, or if you're buying puts at the 75 strike and you think there's potentially more downside if we break this 85 wick tomorrow or the next couple of days on earnings. If we have bad earnings and we see sell-off, you'll probably see the 75 get hit by the end of the week if it's very bad earnings. If the earnings are atrocious, like a Netflix type of move, I think you'd want to target right at the bottom of this green candle where all the buying started. And I think I'd probably want to target around 55 there on the downside. That's if all things hell breaks loose. I call it the all hell breaks loose, which we saw on Netflix, all hell broke loose, and we just absolutely fell off the cliff. That's what I'd target as the sort of the downside. But, you know, the first downside, I think support to be 1 bottom, 2 bottom, 3 bottom, 4 bottom. We maybe could create a 5th bottom here and a 2-year chart lookout at about $75 a share. Okay, so that's the technicals on AMD. Hopefully that's helpful. Tesla now. Let's go to Tesla. Daddy Elon Musk. Want to talk through this one. This thing has been crazy. I was so unbelievably impressed. And I'm not a Tesla fan. I'm not necessarily an Elon Musk fan. I think the guy's crazy. I love him to death because it's so fun watching what he does. I think it's just insanity. It's crazy. I love it in that aspect. It's good humor for me. But I'm not a huge Tesla fan. I've never owned it. I've never longed it. Obviously, I missed out on this opportunity. It was an unbelievable stock to own a couple years ago for the upside move. And this thing just absolutely exploded. But I want to go back to what's going on, right? He's got to pay. He bought out Twitter. It kind of went through. The transaction I think is August, I believe, and I think there's $1 billion of fees on both ends if the transaction does not go through. I believe that's the case, or is it $2 billion? Maybe that was Activision, $2 billion. But Twitter, and I think so. What I'm seeing here, I know he sold $4 billion worth of Tesla stock. I think in an insider forum, I think we saw that come out last week. This weekly chart doesn't look good, guys, on Tesla. It's not bad. It's consolidating. Same thing, though, with QQQ and SPY. Like, for Tesla, are we going to see the retest of 775? Or are we going to see the retest of 750 in here? Right? The bottom here would be about 775. See, this is where all the big buying started. It looks like the chart wants to go back to 775. From when I look at it, it just looks like this is the weekly chart. Now let's look at the daily chart. Like, okay, look at all these red bars. Do you see a single green candle in here on the daily the last 5 days? All I see is red. Even though they had unbelievable knock off your face numbers, like legit, the numbers were, I was so impressed how he pulled that off, how the company pulled that off with supply chain issues, inflation, the China thing. It was just, and then the demand, I was so impressed by the numbers. So you see, this is a name that gets picked up pretty quickly on any small glimpse of dips. You saw the dip on Thursday get picked up. You even saw Friday get picked up until the end of day where it sort of just sold off 2%, which is, normal, and considering how everything else sold off 4 or 5% the other day. The QQQ sold off 3-4%. Where is this chart heading? It looks like it wants to retest in here around 800 to 775, right? Which is kind of where I said earlier on the weekly chart, where I just showed you guys. So in here, we got a double bottom at 760, 775. So I think 775 for me could be a nice area to maybe add some long calls in. I do like this name. I do think the market valuation is a little rich for what's happening in the broader markets right now. So you could see some selling pressure and sort of algos bring this puppy down. I know shorts still love to attack this one because they've lost so much money on it in the last 5 years, but shorts are just ruthless and just keep trying to push this thing down. But their earnings are just too good every time. They just, as I said, Elon just keeps impressing. It's very impressive, but I think from a technical standpoint, we could see the downside to 750, 775 zones. The upside potential is to about 1,000 here. If it breaks 1,000, I think 1,100 would be another one, and then probably over all-time highs would be about 1,200. So the upside for me would be the top of this wick, 935 in the short term, followed by 1,000 in the second price target. Third price target would be this triple wick up here, be about 1,080. Downside, I said I think it could be 775. If we break 775 on the Tesla chart, we could potentially get down up into here, which would be about 700, 650 a share. As I said, there's very strong demand at 750, 775. So, you really have to knock the heck out of bulls at 775, 750 to break all through there. Because if you keep in mind, guys, back in 2021 in October, that's when Tesla went to the actual moon in like a span of like 10, 15 days. You guys remember that crazy bull run where people were just loading options up and this thing was flying. So that was the Tesla thing, right? So those are my supports, resistances, and entries potentially on Tesla. Hopefully that's helpful. That is the daily and weekly chart. So write those down as well. So we went through QQQ today. We went through SPY today from a global broader market index perspective. And then we went through AMD, which has earnings Tuesday, which is going to sort of tell the tale for the chip sector, in my opinion. If they come out really good, it could help the tech sector, the chip sector, etc. It'll help everything, the QQQ. And then Tesla, if money continues to be sold on an insider perspective or just funds liquidating on this name, it could see lower. If we see buyers step in, we could see a retrace back to sort of an uptrace back to the highs. So, I'd love to step in for a Q&A here. I've done about almost 30 minutes here session. I was trying to keep time, about 30 minutes. I hope this was helpful. I'd love to do some Q&A though. We have about 120 people on right now, and I'm sure 500 to 1,000 folks will watch this by the end of the night. But I did want to prioritize the Q&A session, and I'd like to do this for about 17 minutes because these markets are pretty crazy. And I think it's great for everyone to sort of talk through and ask questions because everyone learns from each other. Knowledge is sort of power, and that's how we sort of take the approach in my premium Discord. We love to chat. We love to chat markets 24/7. It's all we do, and we love to predict trends, and that's sort of why we've been so successful over the last couple of years. It's why we are the sixth ranked Discord in a unanimous review in 2022. You can Google the Discord. You can Google us. Like there's so much great information here. So I do want to put us out for a Q&A. There's a lot of folks on the line here. So let's start to shoot some questions. I'll try to answer as much as I can. I'm already out of breath. I'm taking a quick sip of water. Give me 2 seconds, guys, and then I'll jump into some questions. So just, shoot away. If I don't know the answer, I'll just say I don't know the answer. But I'll give you my best educated opinion on anything. So just give me a second. I'm going to drink some water, and we'll get into it. Okay. Okay. Goal achiever. How long have you been trading, Spud? So I've been full time for almost coming up on 3 years now. I've been actually trying to invest since college. Was that 8-9 years ago? I used to invest in IPOs out of college when I was broke, didn't have any money, worked a summer job. I love to research. Prana Fitness was a really big IPO name that I hit on. I had like $200, $300, and I worked for a summer job. And then out of school, when I had a full-time job here in New York, I'd always be trading and investing on the side. And when COVID hit, right before COVID hit, I was like, I have to go full time, and I loved it so much, and I just was eat, breathe, sleep 20 hours a day for this stuff, and I just absolutely went full time, and I loved it. I'll never regret doing the move again. So that's how long I've been trading for. Let's see what else we got. Shoot me with some questions, guys. Q&A. Thanks, tech team, for putting the Q&A there. Gabe Williams, shop puts for earnings. Gabe, it could be a good idea, right? We saw Amazon get absolutely slaughtered. Shop's a risky one. Those premiums are pretty high. If the premiums stay kind of reasonable for me, if it's under 120, 130% on the premiums, maybe I'll play a strangle for it. But agreed, this could go much lower, but it's already dropped from about $1,700 a share on Shop. I don't know what the current PE multiple on Shops is right now, but I'd have to check the premiums to see and see where if there's call or put volume for Shop. So maybe I'll try and follow the big money on that one for Shop earnings. I also don't know where earnings is, so if you could post that in the comments, that'd be great. Maybe I'll add it to my watch list. Godzilla Rex WWR 52-week low. Yeah, that was a rough one. I thought it would bounce like the way CCJ bounced with uranium names, graphite names. They all just exploded to the upside with other commodities, and WWR just didn't get that bounce. My line in the sand was 150. I actually sold that small bounce that I had. I think it was like 18% in one day. I took a small loss on that one, about 4 or 5K, I believe it was, or maybe it was 3 or 4K in the IRA. It wasn't a fun one, but can't win them all. Can't win all the long swings. So I took a loss in that WWR trade. It wasn't a good one. The chart just kept going lower, even though, sort of that commodity pricing in. Oil was ripping, uranium was ripping, and it just wouldn't budge. So there was some weird trickery going on with that name. Haven't checked that name since. May, July, quietest time, Justin. Yeah, but everything's been so dead this year. So the summer could be great opportunities for the market. So I think this could be sort of an inverse market year of what's going on. Dre R, would you be able to briefly go over the VRX weekly chart based on? I'm not going to bring up a ticker and go through the charts for just one particular question. I just won't do it because there's so many people on the line. So yeah, Dre, I can't look at the VXRT, but I know that pharmaceutical names with pricing power have done really well. If you look at Pfizer, you look at BMY, these names are probably the best performing stocks on the year so far. BMY particularly, healthcare names. I mean, these names are just flying from after having just sort of subpar the last 3 to 5 years. They're having breakout years now because that's what it seems like. That's where maybe a safe haven is in the market. So healthcare has been having some really, biotech and healthcare having some great upside this year. I don't know if VXRT falls in that category or not. I'm just comparing it sort of like a BMY and sort of those larger biotechs. Mistakenly bought QQQ calls, expiration tomorrow. Am I effed? Any hope for me? David Dang, no clue. I haven't looked at futures yet. I'll look at futures right now. But I don't know what the indication is for tomorrow open. I assume we're probably going to open red just because how much red there was Friday, and then China probably wakes up and starts selling. So I imagine futures are probably flat or they're flat. They're flat. Yeah, they're flat. So you might be okay there. Well, I guess we'll see when at the 9:30 bell or what happens overnight. 4 consistent red bars in the history for Tesla. Significant to future. Don't see anything similar in the past. Yeah, Tesla's a tough one to chart, Mark. It's also I call it the wild, wild west, Mark. It's its own beast. You just can't play with Tesla short or long. You just don't know what's going to happen. It's so volatile. For a $1 trillion market cap to be flying up and down like that, it's really crazy. So Tesla's hard to chart. I just tried to chart it for you from a daily, weekly perspective, but it's such a newer sort of move. It's hard to look back in the past and see any selling similarities or even buying similarities. So it's just a volatile mover. Hopefully that's helpful, Mark. CT, what do you think about puts on CVS and WBA? CVS has earnings and the chart is looking bad. I believe I heard on CNBC maybe a couple of weeks ago, I heard one trader or fund manager was selling out of CVS. He was getting really frustrated with CVS. He was saying, that's all I can recall there. Haven't looked into CVS's earnings or PEs or anything like that, or even the charts per se. But I believe there has been a lot of selling on that name. Not sure if they have any strong pricing power or if inflation's going to hurt them, but yeah, not sure when their earnings is as well. If you could post it, that'd be great. Maybe I'll add that one to the watch list as well. Will be sell in May and go away, still be valid. I'm not sure OMS. As I said, we just got to keep following the price action. We haven't found that green bottom wick yet, where the market sort of found a bottom. Friday, we went through the bottom on the selling side. So, let's see what happens. What else we got? Mark, what typically happens in days before Fed announcement? We could just sort of see sideways in between a Fed announcement. We've also seen a built up into the Fed announcement and then just a flush back to where the week started. So we'll see how it happens. I probably see a sideways action into Fed this week, maybe some up and down, not much movement, and see where the Fed sort of comes in at what they say, and then maybe the move up or down on the downside or surprise to the upside. We'll see. Strangle or straddle option for AMD. Yeah, I'm actually thinking about a strangle for AMD this week. If the premiums can stay at a reasonable price, if the premiums can stay where they are the last couple weeks, I'd love to get a strangle. If they start to spike up like Amazon type, the premiums on Amazon went pretty crazy. I'll probably stay away from it, but we'll see what happens. What do you think of this is a good question. Michael Mytokolitz, sorry if I said your name wrong. What do you think of the Chinese ETF? Some are off 80% off the highs. Now China's loosened up some tech delisting restrictions. I actually am very bullish on China, but the problem that I have with China is it's sort of giving me the Russia Cold War, China Cold War sort of vibes from a political standpoint. And I'm not sure I want to be investing in that sort of unknown what's going to happen in the future. That's what scares me from an economic standpoint. Those China names, Baba, Didi, JD, Baidu, like some of these names are really great companies. Baba's like the Amazon of China, and they've just absolutely been growing at an unbelievable clip the last 6 to 7, 8 years. My father's actually a huge Alibaba fan. He loves Alibaba in terms of like from an investing standpoint. And it's funny when I talk to him about it, he absolutely loves it. And he's a guy who just doesn't even sell a share. He's been buying dips for the last 5-6 years. He absolutely loves the name, but what I tell everyone, it's like, or what I see too, it's like there's so much uncertainty there. And you saw the big selling the last couple of months on that name come down from like $1.50 all the way down to 78, 80 bucks as a low. But with China now bringing the regulation down and not being so harsh on mega tech to help the economy come back up, you got to think maybe now China wants mega tech to do well for the short term. So we could see some potential big pops on those Baba names. We saw it Friday and they held up very, very well considering the U.S. equities really sold off. I mean, some of these names are up 8-9% and they were sort of closing at that level. So keep an eye on the Baba, Didi, Baidu, Tencent. Those are big names you may want to keep an eye on for potential more upside. I'll be watching those this week. Any sort of big downside moves, if I can get a dip buy on sort of long calls on those, I think those could outperform the market this year, given how much they were down, and they're solid. Some of those are really solid companies. So that's a really good question. I like some of those names. As I mentioned, the risk is that like sort of Cold War vibe sort of risk from an investing standpoint. I think for me, if I could play those China names, they're going to be from an option standpoint where I'm only risking what I'm playing to the upside or downside on the option premiums. Therefore, I don't actually own stock. I don't actually own equity in the company. I'm just playing the upside or downside with options. Therefore, I can only lose what I put in. So I'll probably play those on the call side if I buy long calls off dips. But those China names are pretty good tickers to look at this week. They had a great breakout day Friday. And keep in mind, a lot of those large cap China names are heavily, heavily shorted on the U.S. side. So you could see the pops be even more overextended. So keep an eye on those names. Great question. Mark Dickerson, you never really talk about correlation between aftermarket hour stock values versus live market values with respect to anticipation. Do you have any opinion supported by evidence? What do you mean? Let me see. Do you ever talk about a correlation between aftermarket hour stock values versus? No, not really. A lot of those large cap stocks sort of drop or go up with the index's weighting itself. So they could be down a ton on no volume, but if that's because the index is down a ton. So you have to really follow the QQQ, the SPY, and the Dow, especially if you're a big player in those particular indexes like an Apple or Microsoft or, an Amazon or Tesla. So definitely follow those. Q Monkey, what do you see for marijuana sector? I was actually pretty bullish on the Tilray call. Let me show you the Tilray. I was bullish before all this big selling happened in the broader markets. Where are we at? It's still holding around 4, 5. It's still holding around 5. And why? If you look at the daily chart on Tilray, we just had that big breakout move about a month ago, right? A month ago, we saw a 45-50% move to $9 a share. We've already lost 50% in 1 month, and we gained 50% in 2 days. So that's sort of why I'm bullish back down here at the 485, 520 zones. I was buying actually long calls in June at the $6 strike at about 525, 535 average area. But I stopped out for about $1,200 loss in my Roth IRA on those because it broke the 20% threshold I had. So I'm going to be watching Tilray and as well as other cannabis names. My favorite cannabis name, and it has the best chart of any cannabis name. I've done some analysis on 30 cannabis names. Find me a better chart than Cureleaf from a cannabis name. Yes, it's starting to fall off a little bit, but they do some really solid revenues in Canada. If you look at this chart from the highs of like 15, it's down about 50%. Some of these other names are down like 85, 95%. So this name is held up the best. It's purely in Canada. It's an OTC name. That's Cureleaf. It doesn't get much liquidity during the day, but that's one I am eyeing for my long-term portfolio eventually if we get that real big washout. I do think this is a multi-decade play potentially, and I do like this name for further upside. Tilray is like sort of that meme name, which is where if any good news out of the Senate or any bills passing or anything like that, this name will be the first to sort of get pushed higher. So that's why I sort of like the calls. It's also a very liquid name. This Tilray name has a ton of liquidity. But as I said, marijuana charts are one of the worst performing sectors in the market over the last 3 to 4 years. They're so heavily shorted. And given that heavily short, if any really big news comes out on this sector, that's when you could see the really overextended bounce, which we sort of saw back in here in March when I just showed. So, I'll be watching these names. I want to see some consolidation, which we're starting to see some slower selling pressure down here the last 4 to 5 sessions. Actually, we had a green day on Thursday. So if this can hold the 485 fives, I think we could potentially see that rip back to $5.70 to $6. And that will be my short-term target on Tilray. But it has to hold 485 for me. Otherwise, we could go to 52-week lows. So good question on the Tilray. Hopefully that's helpful on the marijuana sector. Thank you for all your do. Appreciate that, Godzilla. I appreciate that. I try to work a lot of hours for everyone. And keep in mind, before you do leave the stream, you can check the Spud Zone Discord out. It is in the bio, Spud Zone Discord. That is where you can see a lot of my trades live. I do everything by the millisecond. I will alert my entry, what I'm looking for as an exit. I put my stop losses in, what I'm looking at as a swing, multi-day, multi-year, multi-week, whatever it may be. Whatever I'm trading, I put, in real time throughout the days. And it gets pretty volatile and pretty crazy in there. So I highly recommend checking that out. We also have a ton of educational material as well. But I'll answer some more questions. We got about 3 or 4 minutes here. Sunny Gadgets reviews. What will be the clue that SPY is going up or down on Monday? Do you look at from a Monday perspective? I want to see the price action from 9:30 in the morning to about 11:30 in the morning. That will typically tell you what direction we might be going in the afternoon. Typically. Obviously, things are so volatile, you don't know if it's going to be green, red, purple, orange, blue. Who knows what way we're going to go at this point. But my point is, I really don't like trading market open. It's actually, I've done a little analysis on when I take my biggest losses. My biggest losses actually come at market open, about an hour after market open, if I take a position, or they come on Mondays. I've had 40, 50, 60K red days on Mondays when I'm trading. And so I'm really beating my head saying, don't trade, let everything play out, see what's look good, I'd rather be a little late and get a profitable trade out of it than be like early and then get dumped on, or vice versa, right? Shorting when I'm getting ripped to the upside. So, I try and say, let's be patient, Spud. Let's be patient for the first couple hours and then start to make position plays. Let's see how market opens up. OMS, hey, Spud, I'm a premium member of your Discord. What's the best channel to follow your day trader scalings? Besides Discord, you need to follow. No, you don't really need to follow me on other social medias. If you're a premium member of Discord, everything's live within the Discord. I do post some other stuff on social, but most of the stuff comes in the Discord. Day trade alerts, swing trade alerts, and then options alerts would be the 3 I'd sort of focus on. Mike Anderson, Nile. I like the Nile trade. It's below about 95% where people bought it. It's at 52-week lows, so you're getting a better discount than sort of 95% of the landscape and folks of who bought it, which is sort of what's attractive to me. It's a big social name as well, and it just keeps getting sold off. So I wanted to maybe try and find a bottom on that name. I think there's some potential upside. They had some good earnings, but as I mentioned, everything's super high risk and selling off right now. So I'll be watching Nile this week for sure. Cureleaf, yep. Cureleaf, I went through that one as the marijuana name. Mark Dickerson, someone always responds to questions and insights. Mark Dickerson, you always respond to questions and insights. Awesome Discord and program. You're the best. Thank you for your continued participation and all the learning for us all. Happy to help, Mark. I'm glad it's helpful. I appreciate the positive review. Thanks so much for that. You can always put it in the testimonial section as well. We marketing team really appreciates it. Okay, Lori Williams. You think the news on FBWBI COVID results just made people panic and will bounce back? I'm not really sure, Lori. I haven't followed that one. I'll have to check that one out. Thanks, Tech Team, for putting the Discord and Webull link and everything else in there. Rico, any thoughts on ASTS? That was a momentum trade, I believe, with the if I can recall correctly, that was a momentum trade with sort of the SpaceX and the space news, right? Or satellite stuff. Or am I right on that one? Is that what ASTS does? I forget. I could be completely off ball there. I don't know about that name now. I just know it's sort of a momentum name with, I think it had a catalyst. Or was that an EV name? I forget ASTS. I think it was sort of off SpaceX and all that. But how do you set your stops pre-market? Travis Wallman, great question, Travis. How do you set stop losses pre-market? With my brokerage, you actually can. I use Webull for my day trades. I have a Roth IRA in Webull that I actually just started with like $3,500. I think I'm at 8 or 9K now. I have to check. I got a little pullback, I think Friday, so I might be in the sevens. I also use Fidelity. I've tried a bunch of other brokerages. I use Fidelity for my larger IRAs. But I don't have a brokerage that can do pre-market stops. If you can put one in the chat, that'd be pretty cool, actually, if they can do stop losses in pre-market. Keep in mind, the liquidity is always smaller from a liquidity standpoint, so you may not get the best price action in pre-market. So I've sort of shied away from trading pre-market and after hours completely, unless it's a really liquid name and unless the markets are like crazy volatile. If the markets are really crazy volatile, I'll probably play pre-market and after hours. In 2020, when all those small cats were flying to the moon, 100, 200% moves in pre-market, I was up at 5 in the morning playing those. But there was liquidity there. There was, chart moves. Now it's sort of pre-market for me is sort of dead. So I don't really trade much pre-market anymore. So I don't really have stop losses. So hopefully that helps. David, what tool do you use to catch the big put and call blocks like Tesla 900 puts call you made Friday? Great question. I'll scan, Dave. And I'll see what's coming in and what's coming in fast, like sort of in real time. I don't have necessarily software for it. There's probably some good softwares. I know people use unusual whales for sort of block trade detection. You could use that. You can use trade ideas. You could use a bunch of different sort of software tools. But I was looking at those 900 puts and that expired on Friday, and they were just lighting up. I think there was like 70,000 or 50,000 bought in one day. I mean, that's obscene volume. I mean, that was like double the call volume on another. I think it was 900 calls, so triple that call. So, I just predicted if there's so many people buying high premium spreads in the 900 puts, you gotta think we might be going below 900 on Friday close, and we closed at 878, and those ran I think for like 400, 500% into close. I try to follow the money where the money's going. If everyone was buying calls, I'd say we could rip 2% into close, maybe higher. That's how I try to follow the money, Travis. So hopefully that's helpful. David, hopefully that's helpful. I love to follow price action. Here's my line about price action. This equates to small caps, large caps, med caps, options, anything. This is a very simple analogy. People are like, what does price action mean? To me, this is what price action means. So let me break it down for an example. I gave this to thousands of my students a couple weeks ago. I said this, right? If someone buys $1 million of a penny stock at $1 a share, right? And that's, more than most of the daily volume, right? That's a big buy at $1 a share. That means someone really wants into the stock at $1 a share. What does that tell you as a trader? To me, when I see that kind of candle or see that kind of buy, right? To me, that says, okay, there's so much demand at $1. Someone big wants in at $1. There's a lot of potential opportunity to go up from there, right? There's big money coming in at $1. We might be able to go higher. Now, keep in mind, a million, not a lot. Maybe it's 10 million, 20 million at $1, right? Now, vice versa, if there's 10 millions being sold at $1, what is that telling me as a trader? I'm saying, there's more opportunity to the downside now because there's clearly big sellers went out at $1. Maybe this can drop to now 95 cents, 90 cents, 80 cents, 75 cents, right? Vice versa, as I said, if you're buying 10 million at $1, as a trader, I'm seeing that. I say, maybe we can see $1.10, $1.20, $1.30, right? So I like to follow price action, same as the market. On Friday, when there's hundreds of billions of dollars being sold in the market, what's going to happen Friday end of day? Do you think, we're just magically going to bounce and go to the moon? No. What's the likelihood of happening? If hundreds of billions are being sold in one day, what's the likelihood of happening? A flush. What happened into close? An absolute flush, right? So that's how I trade. I like to follow price action. Wherever the big money goes is where I want to be behind. I want to be the minnow behind the little whale following those trades because they're very profitable. It could be 1,000% on Netflix puts, 2,000% on Netflix puts. It could be, 500% on Tesla calls, whatever it may be, right? It could be options. It could be making 50% on a penny stock runner. It could be shorting a stock down 10, 15% because you see sellers hitting the tape. You want to be following price action. That's really how I teach and coach a lot of my students. That's how I trade too. I don't get involved with all the indicators, the mumbo jumbo, thousands of indicators, and everyone can tell you indicators, and you could have 10 pages on a notebook. Too complicated. For me, I try to make trading simple. Supports, resistances, candlesticks, and price action. Very simple for me. 4 things. Candlesticks, supports, resistances, 1 thing, I guess, so 3 things, and then price action. Okay? And that's sort of how I trade. And hopefully that's helpful when you're sort of talking through, hopefully that's helpful when you're talking through that. I sort of went on a long-ended winning question there, but hopefully that's helpful. That's really it, guys, from question sample. I kind of want to went through... I'm kind of done going through some of these questions. It seems like I sort of asked. It seems like I kind of went through all the questions, which is great. I appreciate all of you guys. We had about 130 viewers at the max. It's Sunday night. I didn't expect a lot, and 130 of you came on, asked some amazing questions. I already see someone DM me taking a ton of notes, pen and paper. That's great. That's what I hope these sessions are for. I don't just come on here for an hour and a half and just talk nonsense. I come here to try and start great discussion, start great questions, just have a great discussion about the markets because, the more knowledge, the better. And, it's really great to learn from you guys. It's probably, great to learn back as well. If you guys are interested, you can follow me on the Discord. Our tech team put in the link above. You can follow it and please do subscribe to the YouTube channel. This is fairly a new YouTube. We have about 5,800 followers. I'm trying to get to 10K followers. Hopefully get there in a couple months. This is a new YouTube, and the goal is to educate. The goal is to sort of talk through the markets together. So that's the goal of this. Hope you guys loved the session. Please throw a like. Please throw a subscribe. And we're going to see everyone tomorrow morning around 8 a.m. For the markets. It's going to be a crazy week, right? We got Fed on Thursday. We got interest rates flying. We got Russia, Ukraine. We got China. We got stocks selling off. It's going to be a wild week. So I want to stay patient when I wake up tomorrow. I want to find my A++ setups, high profitable setups that I think I can play and win. So stay steady, stay focused, and please stay humbled. It's going to be a crazy market. Let's just focus in. Have a great rest of the weekend, guys. Spud Zone out. I really appreciate all you guys' time. Cheers. Have a good one, and we'll see you all tomorrow for the trading week. Take care, guys.